Zach, welcome to the show. Thanks for being here.
Thanks for having me.
I'm really excited about talking to you. But I'm going to let you kind of push your own horn at this point, and then we'll dig into it. Give our audience a feeling for who you are, what you've done, and then let's get into your latest funding announcement.
Sure. So we're a team of entrepreneurs, technologists, and fintech veterans here in New York City that started a company to bring incremental funding to the crypto asset market. And this was all born out of an idea that we experienced ourselves in being crypto asset market investors. We started the company about a year ago now, and we launched our first product in January of this year. And the first product that we brought to market is a US dollar denominated loan backed by Bitcoin or Ether. So today we have individuals and also companies that own crypto assets. They're bullish on these crypto assets and they don't want to sell them, but they need liquidity for things like buying a home or diversifying into other investments, or on the corporate side, getting access to incremental operating capital and paying their employees in cash, and being able to do all of those things without having to sell their Bitcoin or their Ether.
Walk me through that. I'm very interested.
So let's say you're someone that lives in New York or California, where a lot of cryptocurrency investors live, and you thought it was a good idea to invest in this asset class a year ago. So you invested $10,000. Your $10,000 has now appreciated very substantially, and it's worth $100,000. Now, if you sell that position, you're subject to shorter long-term capital gains tax rates, depending on the exact timing of when you made the investment and where we are today, which could range anywhere from 15 up to 55%, which is a big hit to take when you have something that is 90% a capital gain. So rather than sell those assets, you're able to collateralize the value of them through a loan with BlockFi. And so what we do is we make loan offers to these individuals and businesses. We store their crypto assets with a secure custodian, and then we lend them money based on the value of their crypto assets. We were actually one of the first companies in the world to start doing this.
All right. Now, is that straight across, or is there a haircut involved?
There's a haircut involved. So right now we're lending up to 35% of the value. So with that $100,000 of Bitcoin or Ether, you could borrow up to $35,000 USD. And the reason that we lend at a significant haircut is because these assets are very volatile. And we didn't want to put a product out there that was going to give our customers a high likelihood of hitting a margin call.
Even with the volatility, they must be busting down your doors to be able to take advantage of what it is that you're doing. I'm sure your business is booming, right?
We certainly have more demand for our product than we're currently able to support based on the amount of capital that we've raised to date.
Right.
We are working diligently to solve that problem, but I think even after our first 2 or 3 fundraising cycles, we may still have not captured all of the demand that there is for this product, especially as you start to think about some of the other markets outside of the U.S. where there's material demand as well. Crypto assets and this ecosystem is really a global story.
Oh yeah, without a doubt. I'm sure you feel like one of the very first 2 or 3 banks in New York when the Americas were founded. I mean,
that's right.
Right, it's got to have that feeling. BlockFi's latest $1.5 million funding announcement. What is it?
So we raised a seed round of funding, which we completed in January. We had a great group of investors that included some of the leading blockchain-focused investment groups like Consensus Ventures, some traditional venture capital firms like PJC out of Boston, and also strategics like SoFi, which was the most successful group in the non-bank alternative lending sector.
All right, congratulations.
Thank you.
You mentioned how you were founding, how you guys got together and decided to found this company. Latest initiatives, what are you doing now?
We're really just focused on scaling across all the different areas of our business, and we broadly think about those as being capital, risk management, and technology. So we're growing in each one of those areas. we'll be announcing a much larger sum of funding that's specifically going to go towards funding the loans that we're originating in the next month or so. We're growing our team of full-time developers here in New York at a very quick pace, and we're also making some very senior hires on the risk management side of things as part of the trend that we're seeing in our ecosystem of really big players from Wall Street and traditional financial services companies moving into the crypto asset and blockchain ecosystem.
Do you see any breakthroughs using blockchain on the lending spectrum, whether it's just straight collateral for the cryptocurrency or other hybrid products?
Yeah, for us, we get the most excited about the assets that are created from blockchains.
Right.
I think that as blockchain technology evolves, there will be opportunities there. But our experience, especially in starting the business, was that we weren't going to capture any efficiency by leveraging blockchain technology today versus what's available from AWS and more traditional cutting-edge technology-enabled database architectures and coding languages. But that asset that's created from the blockchain is incredibly powerful, and it has massive implications for lending businesses. Specifically, the fact that it's digital and global by design gives you a type of collateral to lend against that nothing like it has ever existed before. So you could envision a scenario down the road where we are lending to individuals in emerging and frontier markets at very low cost rates that have just never been available for any type of lending in those markets. There's another angle to this in terms of creating optionality for those individuals for how they're storing their value and potentially putting some of that value outside of inflationary monetary regimes that they live under. And so that's all kind of coming together with these blockchain assets. But specifically, we're not using blockchain technology in our core infrastructure right now outside of the work that we needed to do to be able to lend against the assets that are created by the blockchain.
I can see a brain trust building here because you guys are going to have the latest product that comes out of a cryptocurrency form of trading or investment. They're going to come to you and ask you how you can design a leveraged product off of it. I can see where that's going.
That's absolutely right, and we're doing a ton of educating and evangelizing right now with lots of different types of institutional investing groups, specifically focused on the debt and credit side for us, but it's happening across the board, with traditional equity investors as well. So there's just so much momentum behind not only what BlockFi is working on, but the entire sector.
Got it. Zach, I got to go, but I can't wait to talk to you again. Thanks for being here.
Appreciate it. Thank you for having me.
You're welcome. Zac Prince, founder and CEO of BlockFi. BlockFi.com is where you'll find this gentleman. All right, we're going to take a break. When we come back, Dennis O'Neill, CEO of O'Neill Capital Advisors. You've been listening to CEO Money with Michael Yorba. The segment is brought to you by The Vitamin Patch.